Welcome, ladies and gentlemen, to Commodity TV. And it's our first day, our first interview here today from the Precious Metal Summit in Zurich. And it's my honor and pleasure to have again for you Alexander Scanlon, the CEO of Barton Gold, a emerging gold producer out of Australia. Alexander, good morning. How are you?
Doing well. Thank you for having us.
Yeah, thanks for taking the time. Fantastic. Very interesting company you have. I'm a shareholder of your company also. I want to disclose that also because I bought right after our first interview. I really like what I saw, and I have a very good feeling on your company because you are a company which is really on a fast tracking path to production in Australia. So please remind us shortly, what's the company then about?
So the very high level for us is we are a very gold-focused company right in the central Gawler Craton of South Australia. So a very, very narrow focus. We have consolidated an historical gold district there that has about a 130-year history of producing high-grade gold across a series of short-lived gold rushes. We've aggregated the area. Our strategy is to step back and build up the regional geology, develop a multi-million ounce platform, and then take this into staged development to produce 150,000 ounces per annum within 5 years.
Super. Okay, that's perfect. And the last time I remember, you just brought out, I think, your resource update, and you have now drilled a lot. I think approximately 20,000 meters, if I'm correct.
Correct.
So when can we, expect the next update and what's going on with the company?
So last time we spoke, that was the end of April or early May. We had a 190,000 ounce resource upgrade at our sort of cornerstone large scale asset. That's the Tunkillia project. Shortly after this, we had a number of institutional groups approach us and say, look, we really like what you're doing, the diligent work, the very careful treasury management. We'd like to be a part of this story and also to help you accelerate some of your earlier potential operations with your stage one optionality, with your mill, with your historical high grade. So following that placement, we have now followed up with about 20,000 meters more of additional drilling. We're still finishing that drilling, but we've already accelerated the assays. So that project that we upgraded, we're hoping to have another update within 2 or 3 weeks. So another resource upgrade.
So nice Christmas present?
Exactly. And then hopefully a New Year's present as well. So around that deposit, we've also identified multiple new gold zones. We've also drilled those. Those assays will follow early in the new year, and we'll hopefully have a second resources upgrade as early as March.
Oh, wow. That's really fast. So you said you were approached by big groups also. So what is cash in the bank? Because it sounds like you have a big work program, and when you want to go in production, you need also money. So what's the status there?
Correct. Yeah. So we have just over $9 million cash in the bank, but we also have the benefit of gold and concentrates. So I think it's one thing we discussed before is we sort of actively monetize our assets. So in terms of being an explorer or a developer, we're a little bit more of an asset manager. We actually own a gold mill. We have camps. So we rent our camps out, but we actually started doing some initial work to essentially work over or recommission our mill and get it ready for a future staged restart. And in doing this, we've taken a total now of about $4.5 million US of gold out of that. And we currently have about $2.5 to $3 million worth of gold in concentrates as well. So we have a strong cash balance, and then we can sell this concentrate as well for additional cash.
Yeah. So how much more gold do you think you have to sell then? Because it comes from tailings, or what is that then?
Correct. So the gold that we've actually taken out of the mill is just out of the gravity circuit. So it's a bit of just a clean out. There may be other elements that we can clean out of the mill, but what we are doing, looking at doing next year during 2024 is potentially processing some of our existing stockpiles that are adjacent to the mill. So we might look at sort of a gentle restart of the mill and produce, say, 3,000 or 5,000 ounces, but that could produce several $1 million more and provide this funding that we don't need to raise from the market.
Absolutely.
And help us transition into what we hope would be a restart of the mill, a full restart of the mill, and a restart of mining operations and normal production from, say, the end of 2025.
Wow, that's fast. How much additional capital you would just guess? I know it's hypothetical by now. No forward-looking statement, please, for the regulators. No, but just a guess. Do you think you need, 50 million, 100 million, just to give us a feeling?
No, a lot less than that. So when we think about a stage one development, what we're talking about doing is using our existing plant, which is on care and maintenance. It was operating during 2018, and our Tarcoola project. This is where we have a shallow, high-grade open pit and a number of shallow high-grade targets near the pit. So that is essentially an existing open pit where we don't need to do any pre-development work. And the mill, we think, is probably $5 to $10 million Australian in terms of just a general recommissioning. So you replace the pumps and the motors and some of the basic piping, maybe reline the tanks, but it's actually a fairly simple restart of the mill as opposed to a redevelopment. So we think the capital cost, if you will, the bridge to cross is quite short and quite small.
Super. And it sounds like that you maybe can do it by yourself through some further gold sales.
Possibly, and we may look to use a credit solution as well. But obviously, we're quite focused on protecting our shareholders from any unnecessary dilution. This is why we focus so much on asset monetization. We'll always make sure that we are well capitalized, because we've seen a number of companies that have great projects, but they get just too close on their cash, and then they put the company at risk. So we don't want to do that, but of course, we don't want to raise too much equity as well.
So how many ounces do you think you would produce in from phase one? Because I saw it's a Tunkillia and Tarcoola, I think.
Correct.
Those are the two. And phase one, and then phase two, when you expect this to be happen?
Yeah, so for phase one, what we'd be looking at is taking this higher grade material from Tarcoola and putting it through our mill. So the mill is a 650,000 ton per annum plant. And the way that the numbers work, if you consider the grade and historical recoveries from Tarcoola, is that if you put 2 to 3 grams per ton through that mill, it will produce between 40 and 60,000 ounces per annum. So if we sort of say conservatively targeting 30 to 50,000 ounces per annum with a mill that's already built, we would obviously be generating very profitable ounces, very high cash flow ounces. And then we would use that capital to keep growing our resource base and keep growing our presence in the region, but then expand into our stage 2 operation at Tunkillia. And that we think might take sort of 2 to 3 years to pull that together, get the development permits, and then actually get into construction and operation. So that may be in total, say, 4 to 5 year mission to get us all the way to 150,000 ounces.
Super, but 2 to 4 or 5 years to make all the time cash flow.
Correct, exactly. The idea is to do it in a series of lower risk, lower cost stages to go from A to B to C to D instead of one big jump.
Okay, super. Is it gold only, or you have also other metals?
So we are focused on gold. That is sort of our headline mission. Naturally, we will have silver credits in some of our assets, and some of our assets have very small silver credits, and some have much more significant silver credits. So Tunkillia, for example, probably has 2 or 3 ounces of silver for every 1 ounce of gold. Now, from an economic standpoint, the value of the silver is much, much lower than the gold, but there is a credit there. And then our geology is very interesting. We are in the Central Gawler Craton of South Australia. This is a globally renowned copper district. And across the highway, quite literally, the other side of the highway is the IOCG province that BHP has consolidated. So they purchased Oz Minerals, and they now have Carapatina, Olympic Dam, and Prominent Hill. On the west side of the highway is the gold district, which we've consolidated. But there is some geological connection between those two. So it's possible in the future we could be seeing copper and other base metal opportunities.
Okay, fantastic. So that sounds like you have not only a top geological connection, but it sounds like the infrastructure is also well established.
Correct, yeah. So we have highway, there's power nearby. We use groundwater, saline groundwater for processing. So we don't have an environmental issue there, and we don't have a big infrastructure problem. But even if we wanted to look at sort of bulk infrastructure solutions, if in the future we wanted to export and produce and export concentrates, we have around $200 billion worth of rail infrastructure that passes right past our project, because our projects lie along the Sydney to Adelaide to Perth Railway. So we have kind of the perfect infrastructure already in place, which is quite nice.
Yeah, I would say it sounds like all advantages on your side.
Correct. Yeah, we chose these assets very carefully.
Super. Alexander, thank you very much for the insight and update. And yeah, wish you well. Merry Christmas, Happy New Year, and hope to hear then the nice Christmas present first, and then the New Year's present you told me. Yeah,
absolutely. Thank you very much.
Super. Thank you very much. Yeah, ladies and gentlemen, that was Alexander Scanlon, the CEO of Barton Gold. And yeah, you heard it. The things are going extremely well. First, they had the resource estimate. Now they drilled 20,000 meters. So hopefully he has a nice Christmas present. And as he's smiling, I think it looks quite good for the next resource update. And the company is in great shape, over $9.3 million in the bank. They have also incoming cash from gold sales out of concentrates. They're cleaning up the mill, and they have the equipment, they have the infrastructure, they have a great team, they have the money, they have the institutions. So everything is in place. I think this would be the next great, mid-sized gold producer in Australia. Check out the company. Thanks for watching us, and bye-bye from Zurich.